Having that said, one of the main events is coming up to this stage, since we are going to have our first keynote. I'm excited to introduce our next speaker, John Medved, a globally recognized startup ecosystem expert and founder of OurCrowd, a venture investing platform that enables institutions and individuals to invest and engage in emerging companies. He will share his insights on the ingredients of a thriving startup ecosystem and the technological transformation it requires. And since every single detail seems to be in order, it is our pleasure and privilege to give the floor to John Medved.
Good morning. Can you hear me? My voice is sort of shot, but hopefully my slides will work. It's good to be here in Budapest. Got here after midnight. And what I'd like to cover in the next few minutes, and leave a little time for questions, is where is the overall global innovation scene moving? Where is it headed? How are countries who are roughly the same size as Hungary doing? For example, I'm here from Israel, and we're literally about the same size population. This year, we're going to hit 10 million people. And Hungary, I understand, is a 10 million person country. So I'd like to do a little bit of compare and contrast, although we have our own special situations over in my country at the moment. And then I want to pose some questions or perhaps some suggestions on how we can work together and perhaps provide some perspective on some ways to move this forward. So if you look at OurCrowd, just a little bit of an introductory card about my own background. We're a venture platform that basically represents about 250,000 investors worldwide. We're managing about $2.5 billion of assets. We've built a portfolio of almost 1,000 companies. And the companies are both companies that we invest in directly. I don't know if that's going to work. We'll see. You got to take risk. We invest either directly or we invest through funds. So at OurCrowd, we have about 500 direct investments and 500 investments through our funds, where we actually have close to 60 different funds. We run 7 incubators. We're a for-profit organization. We're about 170 people. We're big, and our goal is to get to $10 or $20 billion of assets under management by the end of this decade. And we're doing well getting there. So one of the things which is helping us and should help you guys is what's going on in the private versus the public markets. I call it the inexorable march of the private markets. Turns out that, most entrepreneurs dream of ringing the bell on NASDAQ. They want to go to New York, have a big IPO. But the reality is today, that dream is getting farther and farther away for most entrepreneurs. But they shouldn't freak out, because private markets, companies that are staying private, are doing very well, thank you. And you can see what happened over the last decade, which was this remarkable doubling of the assets under management privately. Over $20 trillion in private money. And the fastest growing asset class in the private sector has been, of course, venture capital, which has done very well. Now, we've been very fortunate at OurCrowd to be timing is very important. And to say that you picked your timing, come on, I didn't pick when I was going to be born. None of us did. Sometimes you get lucky. And this has been a very good last 10 years for venture capital. We managed to raise money from a lot of strategic and important investors, and we've grown considerably through the decade. Now, this is a very important slide because it tells you what's going on to that dream of becoming a public company. And it used to be that in 1999, the average period of time from first money to IPO, 4 years, globally, 4 years. Do you know what the average is now? 15. What does that mean in terms of the venture capital business? If you have a standard, how many VCs are there in the room today? Show of hands. Well, first of all, if you're doing an innovation conference, you got to get more VCs. Okay, that's my first piece of advice. Number two is that everybody knows that a venture capital fund maximum is 10 years. So if your venture capital structure is only 10 years in length, and the average time it takes for a company to get public is 15 years, we've got a problem, Houston. Okay, something's not correlating here. But what that means is that you have to build structures like OurCrowd that allow individual investors to not just buy stocks in the Magnificent Seven, right? If you were a smart and a lucky investor, you bought NVIDIA and you bought Apple and you bought Microsoft and you just sat back wherever you're living, hopefully on some beach somewhere, and just benefited from that. But the reality is that most of the value is being created in companies before they go public because they're taking so much time to get there, at least today. Now, in my country, we have a challenging war, which is almost now 1 year old. And the last couple of days and weeks have been incredibly challenging, and even your name came up in the news as Hungary. I told people I was going to Hungary, and they said, "What, are you hunting beepers?" And I said, "No, I'm not doing any business in that area at all." But the reality is that was supposed to be a laugh line, guys. But in any event, the reality is that in our economy, the problems we're facing right now are on tourism, because there's a very, very strong restriction on flights, on construction, and on agriculture. And construction and agriculture, the problems there are due to foreign labor. But the issue is that in Israel, construction, agriculture, and tourism, they don't count. It turns out that Israel, over 50% of our exports, 52% of our exports are high tech. Over 20% of our GDP is high tech. So the way that Saudi Arabia is defined by oil and gas, the way that certain countries are defined, like Australia, by mining and minerals, Israel is defined by high tech. So it turns out that even in the context of a war situation where there are constraints, the country is doing quite well, which you'll see in a second. So there's a report just issued about how are we doing in the first half of the year. And we beat a lot of expectations. We're on track this year for raising over $10 billion directly into tech companies. So to give you an idea, my understanding is that this year in Hungary, so far in the first half, it's been about 100 million euros invested in the tech sector. We're investing about 50 times that at the moment with the same population. And that's happening, and actually Israel is leading the world now, this first half, in terms of the increase, because there's been a decrease globally since the peak of 2021. You'll see in a second some data that shows how things were going great through COVID, and then boom, straight down, like 60, 70% down. And now the recovery has begun. And funny, who is leading the recovery is Israel. Israel has gone up in the first half relative to the last half of 23 by over 30%. The US was up 28%, doing very well. Europe is down about 8%, and Asia is down even worse, about 18%. So here you can see, our private funding as a factor of the years, and we all peaked in that 21 timeframe, and it's now come back, and you can see it's starting to rebound quite nicely, 30% at that point. And we're resilient. We have some rating agency challenges because the rating agencies don't like war, and we're still rated very high, AA, A++, et cetera, but not great. And what's interesting, and this is important, and this is really something that you need to take away, is that unfortunately today, most of the money is not going to early stage companies. Okay, if you're a venture capitalist, it's tough. If you're a venture capitalist who does early stage, it's tougher. Okay, where the money is being placed is by and large in what we call the mega rounds. And a mega round is something which is $100 million per company. So that's a problem in Hungary when you have $100 million coming per ecosystem. Except that in our country, over 50% of the money that was invested were in those mega rounds. And that's the same factor as in the US. In the US, over 50% of the money which is being invested in the mega rounds. Now, one of the areas, and each ecosystem has to really brand themselves and distinguish themselves in an area. And frankly, when I came here, I started asking myself, okay, what is Hungary known for? I think your minister said correctly, you're known for great Olympics and great Nobel Prize winners, okay, which are both very important things. But what sector? And it didn't come to me, okay? It might be my ignorance, but other than general excellence, it didn't strike out to me that said, oh, Hungary is known for this. And in Israel, for example, as a contrast, if I asked venture capitalists, what is Israel known for? They will yell out immediately cybersecurity, right? Cybersecurity, we lead the world. In fact, of the $10 billion being invested this year, over 50% of that will be in cybersecurity companies. So Israel almost dominates the world in cybersecurity investments, which is a good thing for us because everybody needs cybersecurity. It's not going anywhere. The problem is not solved. Okay, it's a problem that keeps on developing. So if you look at some of these mega rounds, they were indeed mega. And so you have companies like Wiz, which is an incredible company that raised $1 billion at a $12 billion valuation. The company is how many years old? 3. 3 years old, and it's at $12 billion. And then, to make it even more weird, 2 months after raising that money, Google came along and offered them $23 billion to be bought out in the largest acquisition that Google ever made. And what did they say? No. Not what I thought was, well, if you speak Spanish, there's a word called cojones, and I won't translate it. But it was quite amazing that these young guys said no to Google for $23 billion. We'll see if they made the right choice or not. Here's you can see the guys there. They're quite remarkable people. So one of the reasons we dominate cybersecurity is not just investment, but is exits. You have to have exits. If you're not giving your investors returns, sorry, it's not. There's just, it's dollars and cents. It's all. I mean, everyone says, well, it's about heart and about courage and about all this soft stuff. But the reality is, if you don't bring the money back to your investors, they're not going to stay with you. And so, luckily, in the cybersecurity area, over the last year, there were 14 major cybersecurity exits. 13 of them worldwide. 13 were from Israel. So that's dominance, okay, which is almost hard to assail. If you look at the global numbers, and this is a quarterly look, you'll see that we were up in the first quarter of 22, in the last quarter of 21, we were at about 200 billion quarterly of global investment in venture capital, meaning we were finally getting to $1 trillion asset class in terms of annual investment, which is very, very important. And then you can see what happened. That's not a pretty slide. Okay, that's the slide of the breakup of COVID. And then as a result of that, sort of people coming back to earth, and 60 and 70% drops in the amount of capital deployed as well as valuation. Now, that's bad news for who? For venture capitalists. If you've got a fund and you've invested it, your fund is now reporting probably bad results or worse results to your investors. But it's good news for who? Venture capitalists. Because if you're raising a new fund, it might be harder, except do you want to invest back in 21 or do you want to invest in 24? You obviously want to invest in 24. Prices are down. There's 2/3 of the investors have gone out of the market. Right now, it's a friendly investor market. So if you're trying to aggregate capital and get back in, now is the time. And you can see that what's critical, if you're going to be investing in venture capital now, is a focus on AI. Just every morning you should take your fingers and go, AI, AI, AI. There is nothing else. 35% of the money invested in this Q2 of this past year globally was in AI deals. That's extraordinary. 35%, it means basically, if you're not doing AI, what the hell are you doing? Especially because it's going to affect everything. There is nothing which is not being affected fundamentally by the revolution of AI. And you can see again how it's just going through the roof. I mean, look what happened in Q1 24 to Q2. It doubled. It's just incredible. $24 billion in a quarter, which is remarkable stuff. And then you look, and here this is the data I was able to pull from Hungary, which shows, I think, the same challenge that is being faced by many countries, by the way. And the challenge is that you were cooking along very well in 2020, 21, 22. 23 hit you hard, okay, like it hit many other people. But now this year should be the recovery. And I'm hoping that we'll see good numbers, and we're here to help and to find deals that we can invest in. And here's some more numbers from E&Y. But this is critical. Read what E&Y said in their European investment note about Hungary. And I just want to quote, one of the main reasons for the low funding amount to Hungarian companies in 2023 was the lack of funding from non-Hungarian investors. While in recent years the amount was quite significant, 70 million euros in 2020, 92 in 21, 70 million in 22. In 23, there was only 8 million euros that came. And this is really, I think, a super important point. You can do as much as you'd like with your own ecosystem. Build universities, build technology parks, increase your number of PhDs, create wonderful programs. If you don't connect to overseas investors and bring them here by force and make them invest somehow, you're not going to take off. It turns out that in Israel, of the rounds that were done this first half of the year during a war, 93% had foreign participation. We have a very vibrant venture scene with billions and billions of dollars, but completely dependent on overseas investment. There is no Israel tech scene without overseas people. There is no any tech scene without overseas. Now, you can be a landlocked country in the middle of the heart of Europe, except you're not landlocked by the brain. You're not landlocked by your Nobel Prizes. You're not landlocked by your Olympics. But you have to find a way to connect with the foreign investors and make a compelling case as well as incentive for them to come here. Because if they don't come, if they haven't discovered Hungary, then I have a feeling that a lot of your efforts will not be successful. This is the most important criteria. If I was giving advice, and I'm not asking for anything for this advice, it's probably worth what you're paying for it, which is zero. But if I was going to give some advice, and what the hell, I'll do it anyway, I would say this is the most important KPI. When you see 70, 90, 78, in terms of millions of euros being invested, that's what you got to focus on. You know, you got to focus on how do you get that number way, way up? How do you cooperate? And I'll tell you one thing, is you focus on your friends. You look and say, okay, which countries in the world have capital and which ones are friendly to Hungary? Either have a history or a common sort of cultural outlook or whatever. And I'll tell you that right now, Israel is very, very friendly to Hungary, okay, and realizes and appreciates the friendship which we have with our two countries, and I think that we should be doing a lot more together. So AI is changing the world and doing it really, really fast. Okay, if you look at this slide, people have seen this version and all kinds of things. I mean, it took like almost 100 years to get real penetration of TV and radio and the car. Even Uber, it took almost 6 years, okay, to get Uber into 100 million hands. How long did it take ChatGPT to get into 100 million hands? 2 months. So the pace of change has just become insane. When you can take something and distribute it to 100 million people in 60 days, that's wild. That means that everything can change overnight. And that's the hopeful, I think, and it can happen from anywhere as long as the product and the vision is right about that idea. And generative AI, of course, has been incredible. Its growth, look at that chart, is about as perfect what you call hockey stick as you're ever going to see. And it's not overhyped. I think some of the valuations might be a little, creating nosebleeds, but it's an amazing area. So I'm gonna have to go quicker because I'm gonna lose some of these times. We're one of the leading AI investors in the world today. We're number 1 in Israel and we're number 15 worldwide. We're just below Andreessen Horowitz. I love that. Andreessen's at 14. I can live being at 15 below them. This is according to PitchBook. And what's important, again, is getting allies. So in AI, who is the most important ally? NVIDIA. You got to have NVIDIA. They are the big deal. If somebody isn't going from the government and going to NVIDIA and saying, we've got great mathematicians, we'll give you an NVIDIA lab, we'll let you build a center here in the heart of Europe, then you're not doing your job. Okay, because NVIDIA is everything right now. And for example, we went to NVIDIA and we said we want to build a fund. And we've got an AI fund, which we do together with NVIDIA and their Inception program. And what's amazing is NVIDIA bought an Israeli company called Mellanox for $7 billion. And that company really provided the networking core for NVIDIA's march into the data center, which has really been powering their company. We have an AI fund already, which has 17 companies. Can't go into them, but they include chip companies. They include companies that are building infrastructure. They include companies that are doing AI for HR, and AI for design, and AI for banking, and AI for coding. But there is going to be a sweep through every area of vertical activity being led by AI. Now, what's amazing about this story, just a couple weeks ago, I don't know if you guys know Ilya Sutskever. Ilya was the chief technology officer and chief science officer for OpenAI. And he left OpenAI, and now he's building a new company. And this new company is called Safe Superintelligence, and it's headquartered in two places, Palo Alto and Tel Aviv. And there are 10 employees now. These are the two co-founders. It's Daniel Gross, and that's Ilya on the right side. Turns out those 10 employees just were funded at a $5 billion valuation, meaning they got $1 billion, somebody paying essentially $1 billion for 20% of 10 people. That means basically every guy's worth $500 million, which isn't bad. And and that's seed money. Okay, we're living in very interesting times. Look, our industry is bouncing back, but it's the tale of two cities. It's the unicorns, it's the companies who are doing well, but there are many companies who are struggling still, who are early stage. You know what I'm gonna do? I'm gonna give you guys a chance to ask a couple of questions, because I think that's better than me just standing up here. And I've got a few minutes. I could go on through slides for about ever, but I would much prefer to hear a question or a provocative comment, okay, from you guys, if I could direct my comments more to our reality together. Any questions? If there aren't, I'll continue. A question? Yes. God bless you.
So you mentioned that it's so important to bring in foreign investments to Hungary. I will just continue very loudly.
Good.
So it's very important to attract foreign investment money. Thank you. And any ideas how we can do that? Because obviously by ourselves it's not very attractive right now. So any suggestions or ideas on that?
I would love to. I'm looking here at almost 200 ambassadors. This is a huge sales force. Each and every one of you are salespeople for the Hungarian story. And I've lived in Israel now for over 45 years. And I remember I built my first startup in Israel when there was not $1 of venture capital. When I had to raise money, I said, well, is this like Silicon Valley where there's venture funds? And they said, no, we're in Israel, there's no venture funds. And I went ahead and I found a way to raise money, built a successful company, which I sold to a large American corporation. I had my first exit. And then I came back and I actually did another one in software. And then I built a venture capital fund myself. But from my earliest days, I was a salesman for the country. I would go to conferences around the world and I would tell the Israel story. And there were no slides. There was no presentation that said, why should they be investing in Israel? But I would go to these various conferences because how in the hell else are we going to build an ecosystem? You've got to get out into the area and you've got to meet people. But you need to also figure out, what is your story? What is your unique, your USP, your unique selling proposition? why is Hungary going to make sense? And I sense in my kishkes, in my intestines, that it does make sense, okay? That Hungary has tremendous talent, is scientifically advanced, has got a good business environment, and it's cheap. My gosh, you know, your price per PhD, okay, is amazing. It's envious, okay? And I think that there is a lot of, you know, when you're where you are now, growth looks to me pretty obvious, okay? And I think that but you have to focus on making bilateral partnerships. Find those countries or those places and don't rely on Brussels, okay? That's all I can tell you. If you're gonna build your strategy based on Brussels, get a new strategy, okay? Figure out a way, okay? I'm not a politician, so I guess I can say what I'd like. But the reality is that, you know, you guys have to chart your own course. You have your Hungarian method, okay? But there has to be some kind of a branding. We were very lucky. We got a book called Startup Nation written, which everybody read. And the numbers are amazing out of Israel, okay? We've been very lucky over the last couple of decades. But I see no reason why over the next 10 or 20 years, Hungary is not, you know, doing billions of dollars a year of investment. And I would love to come back with a better voice in the not too distant future and watch your progress and help. Okay, we want to be partners as much as we can. So with that, I'll let you get back to your day. Thank you for having me. I appreciated being here today.